Good morning, welcome. You're watching Market Cafe on ET Now. It's a Monday morning. We have to take stock of all that's happened on Friday. Let's quickly take stock of some of those global cues coming through, especially on the US and European market front from Ankita. Good morning, Ankita. Start to a truncated week, right?
Yes, good morning to you, Harsh, and good morning to everyone. Now, Harsh, on Friday, we did see a bit of a relief rally coming in for the US, and it capped off a winning week for the US markets at least. Now, on Friday, the stocks rose after a volatile trading session. The Dow Jones Industrial Average gained 132 points. The S&P 500 rose 0.5%, while the Nasdaq Composite ticked up 0.3%. Now, all the major indices had a winning week, with the Dow gaining 0.4% week to date. S&P 500 and Nasdaq gained 1.4% and 1.6% respectively. Now, we also saw a bounce back in the regional bank stocks, which were down, of course. Now, the Deutsche Bank closed 3% lower, however, rebounding from a 7% drop after its credit default swaps, a form of insurance for bondholders, pushed higher. So more banking route coming in there, Harsh. European markets closed lower, as banking fears still lingered, of course, with what we saw in the Deutsche Bank scene on Thursday night. The market slightly trimmed losses after European Central Bank President Christine Lagarde told the European Union leaders that the European Union area banking sector was resilient due to strong capital, liquidity positions. But despite these reassurances coming in from her, the Pan-European Stock 600 index closed 1.4% lower, with nearly all sectors posting declines. DAX closed down 1.6%, FTSE was down 1.2%, and CSE, however, bucked the trend, was up 1.7% in trade. So a mixed market handover coming in from the global markets. Harsh, tell us, how's the crude looking like as of now?
Well, yes, Ankita, and before crude, let's just mark out the SGX Nifty, right? So despite that mixed, global set of global cues coming through, we have the SGX Nifty, which is up a strong 100 plus points. So that's definitely a plus. Over 0.5% higher is what we're seeing on the SGX Nifty, above the 17,000 mark now. So hopefully that should continue all the way through to market open. But let's quickly take it to crude, as you did mention. We're looking at a largely flat crude. In fact, it had fallen a little bit and it's recovered post that as well. And why is crude moving? A couple of reasons. One is that the dollar index has shifted below that 103 mark and has remained there. So despite a weak dollar, we're still looking at crude largely flat, so no real move there. But another announcement that's come through also is that the US Energy Secretary, Jennifer Granholm, said that refilling the country's strategic petroleum reserve may take several years. So that may dampen the crude market mood as well, because as US keeps refilling its strategic stockpiles, that continue to add pressure on the crude prices. But at the moment, it seems like that's not happening, and that will take a little bit of the accelerator of crude, which is already quite reasonable in terms of its relative pricing at the moment.
All right, Harsh, let's quickly take you through the events that you need to keep a track of today. Now, first we have Cognitive Technologies that will be holding a board meeting to consider the appointment of Mr. Srinivas Rao Kandula as the director. We also have HDFC's board meeting to consider issuance of unsecured redeemable NCDs in various tranches under a shelf placement memorandum aggregating up to 57,000 crores. Also, we have VRL Logistics, whose buyback issue will close as of today. And in other global events to watch out for, we have Andrew Bailey, who will be giving a speech at the London School of Economics. We have the 5-day budget session of Goa Assembly that will begin today. We also have the next round of the G20 meetings that will begin today. And finally, Finland's NATO accession vote will also take place as of today.
Right. So with all of that, let's quickly move on to global headlines. 2023 would be another challenging year, with global growth slowing to below 3% due to a slew of reasons, says the IMF chief Kristalina Georgieva, citing a slew of reasons that would continue to suffocate growth, ranging from the pandemic, geopolitical tensions to monetary tightening. Meanwhile, she also stressed on continued vigilance and added that risks to the financial stability have increased.
And staying with some more cautious views coming in from the IMF chief, while urging Chinese policymakers to raise productivity and rebalance the economy away from investments, says she sees merit in a consumption-based economy.
Well, and European leaders speak out to quell fears about a banking crisis after the fallout of Credit Suisse and the concerns related to Deutsche Bank. German Chancellor defends the financial health of Deutsche Bank, stating that the bank is very profitable and there is no reason to worry. Meanwhile, French President Emmanuel Macron said European banks have strong fundamentals and monetary normalization would not be a problem for banks.
And shifting our lens onto the latest from the banking crisis, First Citizens is close to locking a deal to acquire cash-strapped Silicon Valley Bank from the FDIC, according to a Bloomberg report.
Well, and caution doesn't end here. Now, the Australia and New Zealand banking group, the ANZ CEO, believes the latest banking turmoil or the crisis could trigger a deeper financial crisis, something as bad as 2008. Added that the worst is far from over and that things tend to roll through over a long period of time.
And Israel's Prime Minister Benjamin Netanyahu abruptly fires his defense minister. This comes after a day after the minister spoke out against the country's planned judicial reforms. Thousands of protesters took to the streets of Tel Aviv, blocking a main highway following the announcement.
Well, and North Korea fires 2 ballistic missiles into the sea off its east coast, reports South Korea's military in the latest series of launches amid military drills by the US and South Korean factions. The missiles fired have fallen in waters most likely outside Japan's exclusive economic zone. The said launches are the latest weapon tests carried out by the country in an apparent response to ongoing joint military drills between Washington and Seoul, which Pyongyang claims are a rehearsal for an invasion and occupation.
And well, with that, it's time for us to slip into a short break. But as we can see, SGX Nifty it's up 113 points, and also the stock futures for US are also in the green, so expecting a positive start for the Indian markets. But with that, let's quickly slip into a short break. On the other side, we go more domestic. Welcome back. You're watching Market Cafe with me, Ankita Saxena, and with me is Harsh Saita. Let's quickly move on to news coming in on the domestic front now. Reliance Capital resolution plan hits another roadblock as bidders upset over another auction plan. Now, ET Now has learned from sources that Hindujas have asked to consider a lower bid of 8,110 crores, while Torrent has shown its unwillingness to participate in another round of the bid. Ankur Mishra has more details on it.
Yes, Reliance Capital lenders seems to be in a fix because both the bidders have kind of conveyed a cold response towards the second round of auction, which was set to be conducted this week. Now we understand through sources that Torrent has conveyed that it does not want to participate in the fresh round of auction, while its plea in Supreme Court is already being heard. However, it did not get any interim stay on lenders conducting fresh round of auction. On the other hand, another bidder, which was Hindujas Group and which had claimed to have submitted a bid of around rupees 9,000 crore in the last round, have asked lender to consider its earlier bid of rupees 8,110 crore. Now this is interesting because sources say that the bidders are weighing the company little lesser due to the announcement which has been made in the budget on the insurance sector. Now after that, it will be interesting to see whether or not lenders go ahead with the second round of auction or not. The lenders are going to meet today to decide on future course of strategy, and we understand that they will also once again talk to the existing bidders on the participation on the latest round. The lenders were looking for a base bid of around rupees 9,500 crore, and so if sources are to be believed, Hinduja's offer of rupees 8,100 crore falls much less than that, as lenders were aiming to get as close to as possible towards the liquidation value of the company, which is pegged at rupees 13,000 crore.
Well, thanks so much for that, Ankur. We'll quickly move on for the news for the hearing impaired.
संसद के दोनों सदनों में अहम विधायी कार्य सूचीबद्ध, तमाम कोशिशों के बावजूद पक्ष और विपक्ष में गतिरोध बरकरार। केंद्रीय स्वास्थ्य मंत्रालय ने आज भी राज्यों की बुलाई बैठक में कोरोना और मौसमी इन्फ्लुएंजा से निपटने के लिए की जा रही है तैयारियों की समीक्षा। राष्ट्रपति पश्चिम बंगाल की 2 दिवसीय यात्रा पर नेताजी सुभाष चंद्र बोस और गुरुदेव रविंद्रनाथ टैगोर को श्रद्धांजलि करेंगे अर्पित। राष्ट्रपति नागरिक अभिनंदन समारोह में भी लेंगे भाग। G20 के पर्यावरण और जलवायु स्थिरता कार्य समूह की दूसरी बैठक गांधीनगर में आज से होगी शुरू। बैठक में भूमि क्षरण को रोकने के परिस्थिति तंत्र की बहाली में तेजी लाने और बायोडायवर्सिटी को समृद्ध करने पर होगा मंथन। सुप्रीम कोर्ट ईडी के समन के खिलाफ के कविता की याचिका पर करेगा सुनवाई। याचिका में दिल्ली आबकारी नीति घोटाले मामले में ईडी की ओर से जारी समन को दी है चुनौती। साथ ही गिरफ्तारी पर रोक लगाने का भी है अनुरोध। और विमेन प्रीमियर लीग की पहली चैंपियन बनी मुंबई इंडियंस। फाइनल्स में दिल्ली कैपिटल्स को 7 विकेट से हराकर रचा इतिहास। अर्धशतकीय पारी खेलने वाला वीला नीतालाली सीवर ब्रंट बनी प्लेयर ऑफ द मैच। विश्व महिला मुक्केबाजी चैंपियनशिप में भारत ने 4 स्वर्ण जीते। निखत जरीन ने लगातार दूसरा, वहीं लवलीना बोरगोहेन ने पहला स्वर्ण पदक किया हासिल। प्रधानमंत्री ने दोनों महिला मुक्केबाजों को दी बधाई।
And with that, it's time for us to slip into a short break. But before that, let us take you through the lineup for the market. At 8:15 a.m., we have Kamlesh Shah of ANMI on understanding the SST hikes. At 9:20 a.m., we have Lawrence Balenko, technical analyst at CLSA Sydney, on tracking the technicals. At 9:40 a.m., we have Vivek Karve of Mahindra Finance and Kamyani Nagar of Bajaj Capital on changes in the debt mutual fund post, of course, the finance bill. And at 9:50, we have Baldev Prakash of J&K Bank on the growth trends. And at 10:20 a.m., we have Kumar Rajagopalan, who's the CEO of Retailers Association of India, on the retail demand trends.
Well, good morning. Welcome back. You're watching Market Cafe on ET Now. Thanks for staying tuned. Quickly moving on, Muthoot Finance may possibly be excluded from the MSCI index. Samit is here to tell us what else is there in that Nuvama report which claims this. Samit, good morning.
Well, according to the Nuvama research, they are saying that Muthoot Finance is one stock that could get excluded from the MSCI Standard Index in the May 2023 review. Now, as per the current global market capitalization cutoff level, and the calculation they're saying that the stock, if the stock trades below the 930 rupees mark, then there is a high probability that the stock might get excluded from the widely tracked MSCI Standard Index. Now do remember, currently the share prices of Muthoot Finance are at around 965 rupees, which is at a 4% premium to the 930 rupees level, and they're saying that if the stock gets excluded from the index, then there could be a potential outflow of close to 80 to 90 million US dollars, and this cutoff limit of 930 needs to be at around the dates of around April 17 to April 24th. If during these dates the share prices falls below the 930 mark, then there's a high probability of getting excluded. However, on the inclusion side, there is a list of 3 stocks that might potentially get included, which is Hindustan Aeronautics, Power Finance Corporation, and there is Ashok Leyland, which have the probability chances of high chances of getting included in the MSCI index.
All right, thank you for the details, Somit. Now it's that time of the show where we get you all the stock specific action, and for that we have, of course, Vamakshi and Ashesha in the studio with us. First up, Ashesha, tell us what are the stocks that we need to keep an eye out on in today's trading session?
Hi, good morning. So 197 Communications Limited, or Paytm, will be the first one in focus in today's trading session, and that is because company's wholly owned subsidiary Paytm Payment Services has received an extension of time limit from the Reserve Bank of India for resubmitting the payment aggregator or the PA license applications. On account of that, keep an eye out on Paytm in today's trading session. Apart from that, a whole host of pharma and healthcare stocks will be in focus, and that is on account of US FDA action. First up, we have Zydus Wellness, which will be in focus, and that is because US FDA conducted an inspection of the manufacturing facility which is located in Ahmedabad. This particular inspection was conducted from the 20th to the 24th of March for the company. Pre-approval inspection as well as GMP audit were concluded with 3 observations. However, the company has said that there were no data integrity related observations. So on account of this, we will have Zydus Wellness in focus in today's trading session. Apart from that, Lupin will also be in focus, and that is because the company has announced successful completion of UK MHRA inspection of its Pithampur facility. Inspection has been completed by US FDA with 0 observations. Alembic Pharma in focus on the back of US FDA observations yet again. US FDA completed an inspection of injectable and ophthalmic facility from the 16th to 24th March. US FDA has issued Form 483 to this particular facility with 2 minor procedural observations, and the company has gone ahead on record said that the company will be submitting response to US FDA within the stipulated time limits. On account of that, keep an eye out on Alembic Pharma as well in today's trading session. Moving on to HDFC then, where board meeting is scheduled to happen today to consider issuance of unsecured redeemable non-convertible debentures in various tranches under a shelf placement memorandum, and the total quantum could stand at about 57,000 crores. Lastly, Godavari Power and Ispat Limited, remember the company had on 11th Feb informed the exchanges that they are shutting down some of their plants. Now the company has given an update with respect to these plants where they have partially resumed operations with effect from the 24th of March, and the company has said that they will fully resume operations with effect from the 1st of April 2023. So on account of this update that has come in from the company, keep an eye out on Godavari Power as well in today's trading session.
Right, thanks so much for that, Ashesha. I'll quickly move to Vamakshi. Vamakshi, talk to us. You've been going through all the brokerage notes. Tell us what are the important ones, what should we keep our eyes out on?
Well, absolutely. Let's first start off with Phoenix Mills. We have a note that has come in from Morgan Stanley, and what they're highlighting is that the company has a portfolio of well-located malls. In fact, they're aiming to double their rental portfolio over the next 3 to 4 years, and this should in turn drive an FY 24 to 25 EBITDA CAGR of nearly 27%. They are also seeing that the company has a very strong balance sheet, and the valuations for this counter are also quite inexpensive. So on the back of all those positive factors, Morgan Stanley has initiated coverage on Phoenix Mills with an overweight call. They've given a target price of nearly 1,700 per share, which is a significant upside from the current levels of 1,280 odd. The next stock on our radar, and the last stock on our radar rather, would be Sun Pharma. We have a note that has come in from Credit Suisse, and they're highlighting that the specialty platform is emerging as a key growth driver for the company. In fact, specialty sales are expected to double over the next 4 years. India is providing a strong downside protection, and the company company is in fact entering a phase of margin expansion. So given all those factors, they've upgraded their rating to outperform and given a target price of 1,150 per share.
All right, Vamakshi, thank you so much for that. We will keep an eye out on all the stocks that you mentioned. But moving on, CG Consumer and Butterfly Gandhi Mati have announced a merger, and this move comes in almost a year after CG Cons picked controlling stake in the Butterfly Gandhi Mati. My colleague Vinny joins in with more details on this. Over to you, Vinny.
The routine of this announcement came in over the weekend, where Crompton Greaves Consumer Electricals said that they have announced a merger with Butterfly Gandhi Mati. When you look at the deal, for public shareholders of Butterfly, they will receive 22 equity shares of Crompton Greaves Consumer Electricals for every 5 shares held. Now, at the current market price, when you look at it, it's the deal is at a par value for the holders, public shareholders of Butterfly Gandhi Mati. Now, other than that, what the company is also highlighting that the proposed merger is expected to be EPS accretive from the first year itself, and overall the implementation of the scheme will take 12 to 14 months, subject to the receipt of the approvals that they require from the requisite holdings, as well as the requisite companies that are required to give the approval. Now, overall, other than that, when you look at it, why is the merger there? So now this merger actually will lead to a benefit in terms of revenue, cost synergies to be realized over the period of short-term to medium-term time, as well as they're providing impetus for growth across all parts of the country as well. Butterfly Gandhi Mati has a strong presence in the south as well. They can leverage their distribution channels in different parts of the country, which will benefit both of them as well as you know they will be mainly driven by the human capital and diverse skills that is there. That will also be a benefit for both the companies as well, and this will enable for more efficient capital allocation, as well as result in simplification of corporate governance. So let's keep an eye out on this merger deal that has been announced.
Surely we'll keep our eye out on that one, Vinny, but let's quickly switch over. Let's look at PI Industries. The management met with B&K Securities and has listed out several takeaways where the management has iterated a growth guidance of 20%. Let's have Ashesha, who's here with us, to try and break those details down for us.
Absolutely. So B&K Securities met with the management of PI Industries to be appraised of the current trends that are taking place in the agrochemical industry, both globally as well as in the domestic market. They've said that management has strong visibility of growth in its existing product portfolio. They say visibility of growth is also underpinned by government and commercialization of non-agriculture products. They've reiterated their growth guidance of 20% despite several headwinds that we are facing in the global agriculture industry. They've also spoken about competition in detail, where they say competition in agrochemical CDMO business is now beefing up, and the management believes that competition will get its fair share of business as well. As far as domestic business is concerned, they believe domestic business has not been performing well as compared to the CSM business, and the company expects to launch multiple products in FY24. As far as company's inorganic plans are concerned, the company said that it is in advanced stages of discussions to finalize their inorganic growth plans as well. So on account of these takeaways that have come in on account of management meet with B&K Securities, we will have this particular counter PI Industries in focus in today's trading session.
All right, Ashesha, thank you for that. And quickly moving on, after prolonged negotiations and court battles, Manipal Health Enterprises has acquired Kolkata-based Advanced Medical Research Institute, or AMRI, in a deal worth 2,400 crores. Now, Manipal will pay about 75% of the transaction now, and the remaining will be paid after a year as per the agreement. Now, also, all the cases against AMRI promoter Imami Group have been withdrawn. Now, the buyout of AMRI will add another 1,200 beds to the Manipal Group's hospital portfolio, taking its total number to about 9,500 beds and making it the largest hospital chain in India. Now, at present, it has nearly 8,300 beds across 28 hospitals.
And switching over from the hospital sector to the aircraft and airline sector, Akasa Air has completed more than 7 months of flying now in the Indian skies. Growing at a significant pace, the airline has been the fastest among Indian airlines to have 20 aircraft. Akasa Air founder and CEO Vinay Dubey told the Economic Times that the airline is looking to launch international flights before the end of this year. He added that the VAT reduction on fuel is beneficial to the company. When asked about the constraints of bilateral ties to Dubai, he said that India is expanding middle class. It is not a story about 5 cities but 50 cities. So there is no such reason to say that their focus is only on Dubai or any single destination. Look out for Akasa Air making the moves.
And moving from Akasa Air to PVR Inox, world's 5th largest multiplex giant that had recently merged Inox PVR's MD Ajay Bijli says they are currently working on improving margins through better capital and operating expenses. Now, in an interview with the Economic Times, he added that the occupancy rates vary and have hit pre-COVID levels in select regions of the country. Now, meanwhile, he also believes that the ticket prices will hold despite inflationary pressures. Sounding optimistic over FY 24-25 lineup, he says that the revenues remain binary and entirely dependent on the footfalls.
Well, and let's switch over again. What is Nilesh Shah's view on the global bank turmoil? Is the history of 2008 repeating itself? Listen in to Nilesh Shah of Envision Capital. His exclusive conversation was with Nikunj Dalmia on the stocks that he owns in this particular space.
I think the large cap IT companies will still kind of have that kind of growth.
8-10% growth is here.
8-10%. I mean, if I were to kind of just, and I'm taking Infosys as a reference point, even in the best year, which was financial year 21-22 for the sector, the earnings growth was only 16%. In your best year, you're going to grow 16%. Okay, so I think we have to keep that in mind, that they will probably just grow in a range of about 10 to 12%, depending upon how your operating parameters are. So I would still think that, and the large caps have played out. We've seen a huge rebound. So if we look at it probably sometime later, last year in 22 or the start of this calendar year, the IT stocks were on the lower side. I think we've seen some kind of a rebound trade. I think we're done with that. I don't think from here they can outperform in any significant manner, the large cap kind of pack. I think in IT, I still believe that the change and the delta and therefore the alpha will come in from the tier 2, tier 3 names, the mid to small cap names. There they have very interesting opportunities. Somebody's getting into new niche, somebody's getting into new geography, there are client wins, a new CEO, a new leadership team.
What do you like?
These are the kind, well, we own only 2 stocks currently. We own in fact only one stock which is called LTTS right now, and that's about it.
You've sold Tata Elxsi completely?
Yeah, we are out of Tata Elxsi. Okay. So we're going to be evaluating. I think we're going to take 1 or 2 more quarters. And I think in that environment, we will come up with extremely good ideas. But see, a name like Tech Mahindra, which is large
the
cap.
Change of guard there. Yeah.
But I think there's a change of guard. Somebody with strong credentials is really coming in out there. It's got the pedigree of the M&M group. The group CEO of M&M has been very aspirational and is really driving individual operating companies really hard. There is a change in leadership for Tech Mahindra. Size is great. They have very minimal exposure to BFSI. They are in communications and telecom and all of that. So that's one company where we haven't invested yet, but I think we would want to be watchful. We would want to see what the new CEO has in store in terms of his aspiration, his strategy and all of that. We will see and we'll evaluate and maybe take a call there. So that's like one of the names which is part of our prospect list but is not yet in the portfolio.
But this is the lowest positioning in IT in your portfolio as a weightage?
Yes, absolutely.
You're supposed to be the IT guy.
Yeah, but I think
anything in IT, go and ask Nilesh.
I think in Nikunj in 21 and some bit of early 22, I think we had a lot of excesses in IT. Okay, I mean, look at the excesses that we saw in names like Tata Elxsi and Persistent.
60 times, 70 times.
I mean, all of that. Okay, and so I think the markets had priced in as if the margins that they were reporting and the growth rates that they were reporting will continue for very extended periods of time. I don't think so, because our IT companies are services companies. These are not product companies. Again, within technology, maybe some of the SaaS companies, we don't own any of the SaaS companies yet, but I think some of them also might look very, very interesting. Some of them have come off by 60% already, 50, 60, 70% has been a shave off. Maybe some of them become very, very interesting.
Right, that was Nilesh Shah of Envision Capital, of course, talking to us about the IT pack. But quickly moving on, let's take a stock of where Asian markets currently stand at. We're looking at the Hang Seng, which is down over 1.5%. So it already looks that Asia largely is mixed. We're looking at the Kospi, which is down around 0.5% or so. We're looking at the Shanghai, the Nikkei is up around 1/3%, so that's a positive. We're also looking at green on the SX 200, which is the Australian index. That's also in positive territory as we speak, up around 1/4%. And we're looking at the Shanghai, which is also down. So a largely mixed bag. Our own SGX Nifty is up now around 0.5%. It was up almost 120 points at the start of the show, currently at 90 points higher, but still holding on above that 17,000 mark. Need to wait and watch as to where we start off this Monday morning. But with that, we're completely out of time on this edition of Market Cafe. Of course, the market will take the action forward. Thanks so much from Ankita, myself, and everyone who puts the show together for watching.